All right, ladies and gentlemen, welcome again to Real-Time Daily Trading Ideas, our daily webinar series. We will look at the markets with you today. It is Friday, the 17th of March. 17th of May. My name is George, and I welcome you to our daily webinar series. Before we begin, please have a look at our risk disclaimer. Please be aware that when trading Forex and CFD, you are trading leveraged products, and you should always be aware of the risks in trading those products. Please, before going live, consider using a demo account to learn everything about the risks in trading leveraged products. Since it is Friday, it would be usually Dirk's turn. We have every day a different trader for you, but this time it is Jens Klatt who will take over. Jens, since I already missed a minute, we can start right away. You will get the microphone and the screen from me. So let's start and don't waste any more time.
So everyone can hear me now, I think.
Yes, everything works.
Beautiful. Yes. Thank you, George. And yeah, also good morning from my end. I'm really happy to be here today and to give you some thoughts on the markets. I think we are in a very, very interesting market environment in general. So there have been lots of volatility on Wednesday. So some of you probably have seen what happened in the DAX. I already said that for traders around the globe, I think some might be really happy about the tweets and the comments from Trump and his administration, while there's others who probably say, well, next time, please tell me before so that I can prepare accordingly. Yesterday, I think the strong trend, especially on the upside, it was somehow, I mean, I won't say I expected it, but I somehow thought that the chances were higher for such a strong trend on the upside. And still, I'm not really sure what will happen today in regards to trends. So currently, we are a little under pressure in the DAX, for example. We'll have a look at this, by the way, in a few seconds, and also why this probably is the case. But before we start and have a look here at the DAX and equities, I'd like to show you a setup here on the FX markets and a favorite setup from my end, in this case for the Asia trading range, let's call it. It's a simple breakout system. You can also adapt it to other markets, for example, in the DAX, and then there, for example, you can trade the so-called open range. The same is true for the S&P, for example. And here is an adaptation for the FX markets and for the EURJPY in this case. So we are looking at a time span from 3 a.m. to 10 a.m. German time in this case, so Central European time, CET. And then we have a high and a low, and this is marked here with those two red lines. And then we say, okay, we trade the break out of this range in direction of an predefined advantage here. And therefore, we use the so-called EMA 11. This is the blue line, exponential moving average 11 on an hourly chart. Oh, by the way, I'm really sorry. Let me just probably put this here into the chart so that you can see the time frame too. I think this is very, very important to know. So it's EURJPY hourly chart. And then we say, okay, if we trade above, we trade breakouts of this range or out of this range on the upside. And in this case, we were already triggered on the downside. You can see here, we had a sell stop in the market since we were trading below this blue line here with the last candle. The closing price of this candle here at 10 a.m. was below this blue line. So we had a sell stop in the market, entry short then 122.44. We placed our stop here at the high of this range, which is at 122.97. So we have a risk of 53 pips. And then once we are triggered on the downside, which happened around 10 to 15 minutes before, then we are entering short, and we work with the here predefined take profit level on the downside. So it's a statistic, it's a pure statistic approach, in fact. So we're not looking at support resistance lines or something. In the basic version, sure, you can adapt this accordingly when trading this strategy. You can have a discretionary touch to it. And then say, for example, I consider the breakout here to be difficult since this is a very strong resistance or support region. And that's why since I don't expect it to break due to a thin market environment, respectively, a thin economic calendar, for example, you just say, okay, I trade the setup, yes, but still with a reduced position size. So this is something where you could bring your discretionary approach to it. But we are looking here at the pure basic version, and then we have a predefined risk-reward ratio of 1.7 to 1. So that means that the risk here of 53 pips has to be multiplied with 1.7, and then you come out at 90 pips chance, and you subtract it from the short entry, which is at 122.44, as already mentioned. You get out at 121.54. And this is then the take profit level on the downside. As you can see here, again, 10-15 minutes ago, the stop, so the sell stop was triggered here. And now what we hope for is that EURJPY takes on momentum on the downside, hopefully reaches our take profit region. I can already see a question here, which is, why have you chosen 1 to 1.7 as the risk reward ratio? This is based on a backtest result. So we are looking here at a time span of nearly a decade of testing, and within this time span, you could see that the ratio of 1.1 to 1.7 created the smoothest and the smoothest equity curve. I think this is the best way to describe it, which means compared to what to expect in regards to return compared to the potential drawdown. 1 to 1.7 created the best payout, and so far played out really nice over time. Yeah, and that's the setup, in fact. So in regards to the FX markets, that's all we can say so far. I've already prepared some tabs here. That's something we look at in a few seconds then. But first of all, let's have a look here at the economic calendar. You can find it, by the way, on the website admiralmarkets.com, and there via analytics and Forex calendar. Some of you probably wonder, how is it possible to filter it the way I did? Therefore, you can not only here click on the time span you want to look at. In this case, today is Friday, the 17th of May, but also here filter function. When you click on it, you can check the boxes of the countries you want to look at here, and then also of the impact. What you can see in this case is that today there's only one high impact event in the afternoon. I'm not even sure whether it's really such a high impact event. It's the Michigan Consumer Sentiment Index. Sure, to some extent, data coming from the US currently is probably capable of creating some volatility as usual. But if you look at the current developments around the trade war with the US and China in this case, you probably were surprised to see such a subdued volatility as we have seen. And that said, and knowing about the potential impact those comments have also from an economic perspective over the mid to long term, and seeing not big moves in general, one can easily say that, or in my opinion at least, that every data set coming out now, and especially if it's a data set like the Michigan's Consumer Sentiment in this case, is not creating or not likely to create big volatility and big moves in the FX markets. And that's why in this case we can surely say so far it seems as if it's a pure technical day today, and we shouldn't expect big developments to happen here, even though one can surely say, and now we have an idea of, where we can already get an idea of what to take care today. What's very interesting is, in fact, the current developments in the market. So I already mentioned the high volatility in equity markets. In this case, let's have a look in this case at the DAX, and probably not at the daily chart, even though you can already see here, these are daily candles, and you can see they are, especially the last 3 days, that these are very, very long candles. In fact, when closely looking at the candle from Wednesday, for example, you can see here a wick, I'm sorry, a shadow here of this candle at the downside. So there was a high chance of a push, in my opinion, below 11,800 points. It didn't happen, but in fact, the market instead turned sharply around That was a candle of 200 points, and it's not within 1 hour. In fact, it's the hourly chart I now switched to, but it happened within seconds. And the reason for that push higher was that Donald Trump, after the trade war between the US and China, is about to escalate, or in fact, it escalated to a new level. That's something we can probably say here in this context. So you've probably heard about the Chinese now coming up with tariffs on US goods then themselves. We are talking here about 60 billion, if I'm not mistaken. We have several other mentionings, for example, that they stop buying agricultural goods, for example, from the US. But also that there is now speculation that they are probably about to dump at least some of their US Treasury holdings, which caused, by the way, not only volatility, to some extent weakness, especially in the US dollar, but also fears arose from that, some market participants is probably a little brutal or rude to say it that way, but it's to some extent it's a weapon of mass destruction, if you want, at least in the financial world. If you consider the fact that the US here is where especially USTs in this case are used as a collateral, as securities for holding especially positions in the equity markets. It's a strong tool, a widely used tool when it comes to so-called repo trades, for example. And all this considered then, and the knowledge that the Chinese are holding such a huge chunk of USTs and have the chance to dump a small portion of it, and that alone could cause some big spikes in the yield sector, is something to really to be scared about, to be honest. And so with this in mind, it becomes obvious that the US is about to enter in a trade war with another giant, let's say. And the escalation, especially from last week, Friday, then over the weekend, and with the talks in Washington not bringing any consensus here between those two parties, is definitely something to worry about. The next escalation was then found with the Chinese now stepping up and bringing up tariffs themselves, and also the possibility of dumping US treasuries. And what has this to do with this push higher here? Well, it's something which then to some extent could have been expected. If you are in a trade war with the Chinese, you want to avoid other wars in regards to trade then, like Europe, for example. And in this context here, and this is what's now becoming very interesting, this is what happened then on Wednesday. Trump plans to delay imposing tariffs on auto imports. In this case, this is not mentioning EU, but it's explicitly the EU we are referring to here. And the delay should be up to 6 months, which people familiar with this matter size then. So now the interesting part about this, so it resulted, let's come back to the price action of the last 2 days. It resulted not only in this push higher, but was also potential bullish trigger then higher here over yesterday. But what's I think very interesting is so far there has been no real tweet or mentioning from Trump if this is now really happening or not. So it's still just purely speculative, if I'm not mistaken. And with this in mind, there's a chance that Trump probably just tweets today, every day, every second, in fact, that there will be no delay, and that the U.S. will not only go to a trade war with China here and let these developments here escalate further, but also that they take on Europe, Japan, and whoever they are doing big business with here, that they take them hats on too. And so with this in mind, there's every day and every second, in fact, every minute, the chance that there will be a sharper push then on the downside. In this regards, yesterday, for example, there was someone, I'm not sure if I don't have the name available right now, but he said exactly that so far it's still an option that this won't happen, this delay here in auto tariffs then. And the initial reaction was that the market then, that was here, in fact, no, I'm sorry, that was here, that was this candle, that was yesterday around it was around 1 p.m. German time. There was a short spike. We were attacking 12,200 here, this region, and immediately dumped nearly 50 points within minutes, just because this was an option. In fact, then the market reversed, and with strong US equities here, market pushed higher, but in fact, it's still an option and something we should keep in mind. And what is also very interesting then, even though the economic docket is very thin, which is very interesting in regards here to our short setup we formulated for the EURJPY. Why is that? Because the JPY is usually a funding currency for carry trades. Once the trade conflict, not only in regards to China, but also to Europe, auto tariffs and everything escalates again, there's a potential risk-off driver for the markets, and this could then result in JPY strength, which is positive for our current short engagement we are having here in the EURJPY. So definitely something, even if the economic docket is thin, to remember. And there's also something which is where we are very sensible and where we should definitely be really careful about the current developments or the further developments. Yesterday, there was something which is potentially also affecting to some extent the NASDAQ then, and especially, for example, Apple. So as you can read here in the headline from this Reuters article, China's Huawei, 70 affiliates placed on US trade blacklist. So that means nothing more here, and you can see it. It's now on the so-called entity list, a move that bans the telecom giant from buying parts and components from US companies without US government approval. So this is the next escalation of the trade war here, and any step now from the Chinese, taken from the Chinese here, and I have no idea how it could look like, but it's definitely something to be worried about when it comes to Apple here and business Apple is doing in China. Probably there will be a step from the Chinese here too, in which direction ever. And we also know about the weight Apple has in equity indices, which means nothing more than if there's another escalation then from side of the Chinese here, and to counter those measures here on the telecom giant from China, Huawei, well, what could be the result? The result could be that this is driving Apple share prices significantly lower, and based on the weight Apple has in an index like the NASDAQ, well, it could also drive the NASDAQ lower, and so US equities in general. So this is also something to be careful about. We all do not know when this might happen, but we should remember this when taking positions in the current market environment, and how important it is to have a clear, predefined risk management plan here and to predefine our risk when taking any position. So this is a very, very, very dangerous market environment we're currently in. That doesn't mean that we shouldn't take trades, because there's also a chance connected to it. It's not only a risk, and that means high volatility can also, if we awake on the right set of variance, we can then see potentially nice gain. On the other hand, we should look at trades first from a risk perspective and predefine this risk and be aware of it, probably take potential slippage into account, and then consider engagements here from a risk perspective first, reduce the position size, work with clear sets, stops, for example, and to be on the right side. And also finally, for the currency traders, also probably very interesting, also in regards to trade, that's the next front here. It's not only Europe and the US and China, but it's also the US and Canada and US and Mexico, for example. And on Wednesday, there was here a mentioning from the finance minister of Treasury here, Mnuchin, who said that they're close to an understanding with Mexico and Canada on resolving the steel and aluminum tariffs, especially in regards to the Canadian dollar. I think this is a very, very interesting development. And why is that? Well, it has to do with the fact that here, and therefore, let's switch over to the traders block. On admiralmarkets.com, analytics, and then, I'm sorry, a technical analysis, not traders block, technical analysis. And here, we published an article yesterday on this topic. Here, they can see it. It's still a fight with 135, and so far we didn't make it above that level. There were several attempts to break higher here above that level. Probably let's look here at the chart. We have it there. So you can see here, there's now another attempt to go for 135. If no break happens on the upside, and we get to see a mentioning of now the trade war here being delayed too, and aluminum and steel tariffs are lifted for Canada, that could then cause a bullish attempt here, or bullishness in the Canadian dollar, in the loonie, and result in a sharper drop on the downside, where the make or break level can be found around 33.80. So if we drop below 33.80, further losses down to this trend line here on the downside to 32.80 as a first target are very, very likely. On the other hand, we can also say every breakout here on the upside above 35 is then capable of pushing us towards 36.70, especially if those tariffs are not lifted. And if currently market participants were probably aggressively anticipating such a lift of these tariffs, if they are not lifted, they're probably disappointed, they're caught on the wrong foot, and this could cause a sharper squeeze on the upside, which is then leveling the path up to 136.70 here if we make it above 35. Yeah, so there's lots of potential volatility happening. Unfortunately, we do not have a clear time when any comments will be made, but well, let's assume somewhere from 12 p.m. German time, so that's 11 a.m. London. And when the lights go on and the lights are switched on here in the White House, and Trump is grabbing to his smartphone and about to write something and then tweet something, well, this is then the time to be really careful and to expect to happen something into the weekly close. And yeah, so that's it from my end.
All right, Jens, thank you very much for your analysis and also deeper look into the fundamentals of the trade war. Do you have any final words for the webinar, or should I take over right now?
Happy trading. What's your stops? And oh, by the way, no, there's also something today at in around 1.5 hours. So it's 12 p.m. London. We have our weekly market outlook here. You can register for this webinar here via the education tab and Forex webinars, and I'd be really happy to welcome you there. So we want to have a deeper look then into what I just looked at in a very rough way, let's say, and give an idea of what is important then in the next week of trading. So here it's the weekly market outlook, and yeah, that's all from my end.
All right, thank you very much, Jens. Yes, dear participants, of course, you can register for free for the webinar with Jens in 1.5 hours. He will be happy to welcome you and will get you a much deeper look into the markets and probably into the fundamentals of the trade war. If you have any questions after the webinar, you can simply contact your local customer support team. We are available for you around the globe, so simply go on your country webpage and you will find the contact data for your customer support in your native language. Apart from that, we wish you a nice and successful trading day, and yeah, see you again next week. Have a nice weekend and bye-bye.